Okay, so forget everything you think you know about how financial systems collapse. Today we are diving deep into a theory that argues the next huge global shift won't even start on a trading floor. Nope, it's going to start with a single, physical kill switch. A geopolitical move allegedly designed to trigger a complete and total system reset.
And right there, that's the central claim from our source material. The whole idea here isn't about some slow, predictable decline of the current financial system, not at all. It's about an abrupt, deliberate shutdown. This one concept, a physical kill switch, is really the key to understanding the entire dramatic chain of events that the theory lays out.
So, here's how we're going to break this all down. First, we'll get into the specifics of that physical kill switch. Then, we're going to look at why the system is supposedly so weak on the inside. After that, we'll follow the money in what the source calls a great migration to new assets. We'll investigate the new financial infrastructure being built, and finally, we'll explore the proposed endgame, a new world order the source calls Pax Technocratica.
All right, first up, the supposed kill switch for the petrodollar. The theory we're looking at claims that the entire system's biggest weakness isn't buried in code or on some digital ledger, but in one single, physical choke point on the world map.
But before we pinpoint that location, we need to wrap our heads around what's really at stake here, the petrodollar system. You know, for decades, this has been the absolute bedrock of U.S. financial power. It's a pretty simple deal with massive consequences. If you want to buy oil on the international market, you have to do it in U.S. dollars. That creates a constant artificial demand for the currency all over the world.
And that brings us to the source's wild 10-day collapse scenario. It all starts, supposedly, with a U.S. military intervention in the Strait of Hormuz. But the response isn't what you'd expect. It's not conventional warfare. It's asymmetric. The idea is a strike on critical desalination plants, which threatens the water supply of those big oil-producing nations. According to this theory, that one act makes the whole security guarantee just evaporate, leading to what the source calls the physical death of the petrodollar system.
But hang on a second. Why would a single flashpoint be enough to topple a whole global system? Well, the source argues it's because that system is already incredibly fragile on the inside. The external threat is just the final nudge for a structure that has allegedly been cracking for years.
So this slide contrasts two very different stories about inflation. On the left, you've got the official narrative blaming supply chains and global conflicts. But the source we're looking at today offers a totally different explanation on the right, a deep structural breakdown in the private credit system, and it traces the origin point all the way back to the repo market crisis of 2019.
And to really illustrate this point, the source uses this incredibly powerful term, corralito. Now that's a historical reference to banking freezes where people were literally locked out of their own accounts. The argument here is that recent withdrawal limits we've seen at major financial institutions weren't just temporary glitches, but deliberate containment plans for a system that was already on life support.
And this all leads to the theory's most provocative claim, the idea of a controlled demolition. The argument here is that the current liquidity crisis isn't an accident. No, it's being deliberately engineered. It's being managed to create just enough pressure to force a mass migration away from the old financial rails and onto a brand new, pre-planned digital system.
So if a migration is being forced, where's everyone supposed to go? Well, that brings us to the Great Migration. According to the source, this isn't some chaotic scramble for the exits. It's a calculated shift away from purely speculative digital assets and toward a new digital infrastructure that's built for real-world utility.
According to this analysis, the most valuable strategic asset in the world is no longer crude oil. It's hash rate. We're talking raw, verifiable computational power. This is seen as the base layer commodity of the entire 21st century.
But the source points to a huge problem with how all this hash rate is currently being used. It claims the cost to mine just one Bitcoin is approaching $80,000. Now think about that. When the cost to produce an asset is way higher than its market price, the theory argues that you've got a terminal economic crisis for that whole industry, forcing miners to find a new profitable use for all their hardware.
And this economic pressure is allegedly forcing what the source calls a computational capitulation. Basically, it's describing a mass pivot, a huge exodus of this incredibly valuable computational power away from mining and toward other more productive sectors like artificial intelligence and high-performance computing.
And that leads to this crucial pivot outlined in the theory. The potential for massive speculative gains, represented here by Bitcoin, is being deliberately sacrificed. In its place, the source argues that capital is being funneled toward what it calls Omega Utility, a system designed for real-world settlement. And it specifically identifies this new destination as the XRP ledger.
You know, it's pretty interesting that the source material itself is positioned as offering insights that you just won't get from mainstream reporting. It frames its own analysis as a way for its audience to get ahead of these massive market shifts.
Okay, so if a new system is being built, the logical question is, who are the architects? Who's holding the blueprints? This brings us to the new financial rails, where we're going to look at the people and the technical standards the source alleges are driving this whole transition. So the technical foundation, according to this theory, is something called ISO 20022. The easiest way to think about it is like a new universal language for money. It's a global standard that will let all the world's financial institutions communicate seamlessly on the exact same network.
The source then alleges a kind of institutional capture through what it calls a revolving door. It points to these key figures who have moved from the absolute highest levels of U.S. public finance. We're talking a former U.S. Treasurer, senior officials from the Fed and the Treasury, and they've moved into roles with Ripple, which is the primary company developing the XRP ledger.
So you take all these pieces, the physical trigger, the internal crisis, the great tech migration, and these key players, and it all leads to the source's grand conclusion. Welcome, it says, to Pax Technocratica, a vision of a new post-capitalist world order.
So, what would this new order actually look like? Well, the source outlines some very distinct features. Things like central bank digital currencies that are programmable, which means they could have expiration dates to force you to spend. It also describes the possibility of geofencing to restrict where you can spend your money, and even energy lockdowns that could limit consumption for everybody.
And this brings us to the final, critical assertion of the whole theory. The source doesn't frame this transition as a gradual thing that might happen. It's presented as a planned inevitability. It claims a sudden, system-wide, flip-the-switch event is not a risk to be avoided, but an actual design necessity to force the entire population onto the new system all at once.
So the final takeaway from the source material is pretty simple. In the face of such a deliberate and sweeping change, the only defensive move left, it argues, is to understand the new settlement infrastructure and to be positioned in the utility assets that will form its very foundation.
And that's where we'll leave it, with a really provocative question. The source material presents this flip-the-switch event not as a possibility, but as a straight-up necessity. And that forces anyone who even considers this theory to ask themselves, if it were to happen, what would being prepared even look like?
And a final and very important note from the source material itself, which we will absolutely echo: this breakdown is strictly for educational purposes. This is not financial or investment advice. It is absolutely essential to do your own research before making any decisions.